Hello everyone, this is Lawrence, founder and CEO of Lawrence Group Company, Lawrence Group Organization. We are very delighted to welcome you in this video. We want to talk about word for professional business communication. We are continuing with our topics and our topic, and we want to deal with the other word as well. All right, let's go. We have the word banknote here. Banknotes. All right. What does it mean? Banknote. All right. Banknote is a negotiable promissory note which one party can use to pay another party a specific amount of money. A banknote is payable to the bearer on demand, and the amount payable is apparent on the face of the note. Now, it's actually a document where where which emphasize the fact that you have to pay to the bearer to pay a certain amount of money. Or which document I say I would say a document or a small document which has the description of the payment that you want to do. Okay, let me explain further. It has the specific amount of money documented on a document to pay back. All right, to pay back or to pay whatever the case may be. It's a banknote. It's a note done on a document to pay a certain amount of money. All right, let's go. Cashier. Cashier here is actually a person. Is a person who is working in, let's say, a supermarket or in any organization. Is the one who handles money. All right, is the one who actually keeps the record of the financial situation within the organization. Is the one who handles the money part. It can be at the reception of any supermarket, but it's the one who work on the financial situation of the company. All right. Co-worker. A co-worker is a person who work in the same company with you. It can be either at the same position or not, but the mere fact that you're working together in the similar company, you are called is called a co-worker. All right. Um, Another one is the lender. The lender here is an individual or a group of financial institution that makes funds available to a person or business with an expectation that the fund will be repaid. All right, repayment will include the payment with an interest. Over here, the lender is the one who makes the fund available to individual or to institutions with an interest in the refunding. All right, in the repayment of that amount of money with a certain amount of percentage of interest. It's called lender, who makes the fund available. The borrower is the other part, the one who actually borrow money from the lender. All right, especially like there are actually a transaction here. We have the lender and the borrower here. The lender makes money available to the borrower. The borrower borrow money to the lender, and there is an exchange percentage here of interest rates. Is that okay? Alright, if it's not okay, please put in the comment section, keep asking questions in the comment section, and we're gonna have to explain further, alright? Let's move. Resign. Now, anybody will ask me, what is resign? Over here, resign means to formally end an employment contract or to quit a job. Alright, it's actually known as leaving a job. It's actually a formal quitting of a job or stopping or a formal a formal end of any employment contract within a company when a person stops his job and he resigns his contract, he stops his contract, or he may cancel or stop his work, you know, his employment contract is called resign. or it can actually, let's say, I would say, ends his company employment contract. Is that okay? Dismissal. Dismissal over here means when an employer ends an employee contract. All right. Over here, dismissal, an employer can say he has been is dismissal from the company. It means the employer actually ends the contract of any employees within the company. Fire. Fire here to dismiss an employee from their job. But fire is also a little bit the same as dismissal, but a little bit different, but a little bit like a ceiling. Fire to hand an employee contract or to hand his job, all right, to stop his work in the company, um, to dismiss an employee from the work, the act of making someone leave the job. All right, it's like an employer that stop the contract or makes someone any of his employees leave the job. He actually fire him, and you have to notice that these two, these three, they are verbs actually. They are actually verbs. The loan here, the loan is the amount of money that the lender take from the lender found gives to the borrower, or the borrower takes to the lender. The amount of money, this amount of money here, the amount of money is called loan. All right. It says that the money lent to a company which need to be paid back, usually with an interest over a certain period of time. Now, the money that is in this transaction between the lender and the borrower, the money in this transaction, um, putting apart the interest, the percentage of interest rate is called the loan. All right, do you understand it? It's called the loan. Now, to purchase here is the act of acquiring goods or services in exchange of a payment. Is actually the fact that somebody uh, um, buy something, all right, buy a product or pay for a service with exchanging with a certain amount of money. He buy with the money is actually the word purchase. Now, I think it's done. If you have any other further questions, you can put in the comment section. And yeah, so it's all for this video today. Let's see in the next video. All right. Thank you very much, Lawrence, founder of Lawrence Group Company, Lawrence Group Limited. Thank you. See you.